Good morning, everybody. Welcome back into Mining Stock Daily in this week's long form episode on MSD. We've got a 2-segment episode for you as we are now starting to potentially see that correction in precious metals. Gold hit 4,000, silver hit 50, and just like that, it is retracing. Peace in the Middle East? Maybe there's more to it than that. We're going to talk about that with our first guest, Mr. Bill Fleckenstein of Fleck. And so we will dive into the precious metals move, what we've seen, what we know, expectations here for the rest of the month with Bill. Always a great conversation to have with Mr. Fleckenstein. And then we welcome back a fan favorite, Mr. Tom Woolrych, to dive into a few specific stories in junior mining and exploration as well. He'll be showing some of his 3D slides to all those following on YouTube as well. So if you are wanting to see those, make sure to go visit us and maybe give us a follow on our YouTube page, Mining Stock Daily. Special thank you to Vizsla Silver, Equinox Gold, Revival Gold, and Integra Resources for the continued support of this podcast. And we will just jump right into it because there's a lot to talk about with my two guests. Have a wonderful weekend, everybody. Be well. All right, well, it's that time of year. Well, I guess we do this once or twice a year, but I get the chance to sit down with Bill Fleckenstein here of Fleck Capital to dive into markets. Bill, it's a pleasure to see you. It's been a while. How's the fall treating you?
Fall's been pretty good so far. Let's see how it goes as it turns into winter.
Where do we find yourself this week?
This week I'm in Seattle.
Oh, very good, very good. Okay, beautiful time, beautiful place to be in the spring or in the fall, but
yeah, as long as
not so much in the
as long as
winter.
you don't go downtown. Yeah.
Listen, it's maybe fortuitous that we get a chat here on this Thursday afternoon. Gold ran up to $4,000. Silver hit that $50 mark, and then just like that, big sell-off here. Those were two big targets here for the precious metals. So I kind of want to talk to you about this, this Thursday correction or, sell-off that we're seeing. But before we get that general story behind precious metals, maybe focus on gold. You've been a student of this metal for quite some time. But this move over in the, throughout the year, what's been the narrative behind this move? What's it been telling you as an investor?
Well, I think that's one of the features of this year that has been, I think, a bit more unique than the last, say, several years when gold's done all right. And by that I mean there hasn't been an obvious quote unquote narrative, right? I have described it to some friends of mine that are knowledgeable about markets as saying, gold never quite did what we thought it. Those of us that thought we needed to own gold because of the policies being pursued by the U.S. government, the Fed, and the other central banks, for the last 5 to 7 years, we never really got paid like we thought that we ought to have been in the way gold performed. Then in the last year or so, we've gotten all of this quote unquote payment, and nothing incrementally, dramatically bad has happened. And right. So it's a bit of a head scratcher. Why do we get all of this outperformance, if you will, when events are seeming less bad? The Fed isn't actually doing QE now. They're kind of, they're baby stepping their way through QT. The Treasury's playing games. So anyway, I think it's been a little confusing. I think the real story is that twofold. One, it's pretty clear that Trump is going to have his own men at the Fed, men or women, and they're pretty much going to do what he wants. And so, does it matter if you like Trump or hate Trump? We know what his policies are. We know the kind of people that he's going to pick. And that is going to be probably negative for the dollar, negative towards more inflation, and I think it's going to cause people to want to own gold. If you think about what it would look like with Trump controlling the Fed, then I think you can see that we're on a path to where at some point the Treasury will likely want yield curve control, because the bond market's not going to sit idly by while they try to grow, while the government tries to grow its way past the debts that have been created. And thus, the bond market, I think, at some point is going to react negatively. Thus far, it's been pretty docile during Trump's administration. But I think rates will back up, particularly like 7 years and out, right? There's been a little big backup in where rates, say 7 years and in, rates are lower over the last 12, 13 months, but say 7 years and out, they're a little higher. So the bond market, the bond part of the fixed income market, hasn't really cooperated with the Fed. So if that's an early warning that as the Fed tries to cut more, rates are going to back up, at some point yield curve control is going to happen, because Bessett can only, he's brought so much into the short end. He can't bring everything into the short end. And he knows what they did in Japan, and they got away with it. And, we did it in the 50s, 40s, and 50s here as well. So I think that's coming. So I think as you look down the road, it's now clear to more people that all the central banks are pretty much worthless. All the paper currencies are pretty much worthless. And now gold's got a bid. Now gold's also got a bid and has got momentum behind it. So I'm sure there's entities that own it that don't really care why they own it. They own it because the number's going up, right? But I think, but it has gained more favor. You see more Wall Street type firms suggesting you need to own gold, which was the case before Volcker broke the back of inflation in the early 80s. And some ownership of gold was deemed to be a prudent part of your portfolio. And now you can see there are recommendations to change 60-40 to, adding some gold into the mix. So all of those positive. And I think the momentum factor has driven it to here, and what's driven it has been largely foreign central banks and Asians. It hasn't really so much been Americans. If you look at the the shares outstanding in the GEX, say, which is the mining ETF, and even in the GLD's up, but it's not up dramatically. And if you look at open interest in the futures market, it's really closer to what you see on lows rather than its stretched prices. So we've got this odd mix. Yesterday, the DSI hit 86, which is a pretty high number. And then we have this big reversal in the last couple of days. And so it would appear that we're having some kind of a correction, whether it lasts for 2 days or 2 weeks. I don't know. We had one this spring, that went on for 3 or 4 months. Then the prices resolved themselves higher. I believe prices will resolve higher. But the problem with gold is there's no quote unquote right price. Nobody knows where it's supposed to trade, right? It's this amorphous thing, and nobody knows where the price is going exactly. I mean, if you're lucky enough to get the direction right, then you've done a good job. That's the way I look at it.
Well, then let me be the first one to congratulate both of us here, Bill. If nobody's congratulated you on that today, but let me ask you this: back to focusing on the Federal Reserve, what's a bigger concern? The exponential decay of anonymity with the Federal Reserve that's before us, or the decision making that is laid out on the table of what happens down the road when all the king's men or women are sitting in the boardroom?
Well,
the yield curve control.
Part of the reason we are where we are, financially, is because of the missteps the Fed has made along the way. Right, created 2 bubbles. Didn't learn the lesson from the first one, created a second one, didn't mind the store and do their regulatory functions. So the banks ended up with all the bad assets, which almost vaporized the financial system and life as we know it, in real time in 2008. So the Fed has made many, many horrible mistakes, never learns from its lessons, and then in COVID, Powell stayed easy way too long, diluted himself on this transitory stuff. So the Fed has lost a lot of credibility. People like you and me may have been making this argument about them making mistakes for 25 years, and now it's really come, it's come home to haunt them, or said differently, gold's played a lot of catch up, right? Because now people have really seen it for what it is. So I think the Fed has been an engine of real trouble. It's allowed can kicking regarding the size of the national debt, because there's never been any pressure on Congress to try to do the right thing, partly because of a lot of the monetization that the Fed has done after we've had problems. We've never had a real moment to have to deal with problems. After the '08 collapse, the Obama administration did zero. I mean, all we got out of it was, Obamacare and tightening some bank regulations. Some of them probably went even too far. Not that I have sympathy for the big banks, but so here we are today, and I think so the Fed doesn't have that much credibility. A lot of people still respect it. Now you start talking about Trump basically running the Fed. Just picture the Fed with Trump running it. Let your head wander to what that looks like, and people are going to assume it's going to be, an outcome that's going to lead to higher inflation or more trouble, even if you think he's brilliant. Because, I mean, one thing we know for sure, he wants rates lower than they should be. I mean, he's a real estate operator. Right. Come on. So that's what's going to happen. So I think people are preparing for that. How much of this move is anticipation of that, and how much is this just catch up to where the price maybe should have been higher all along and wasn't. I can't say. I don't really know that anyone could. But I think where we're headed to is going to be a period where you're going to need to own gold for protection, because not so much that the dollar is going to tank versus the other pieces of colored paper, but the dollar is liable to decline against goods and services, i.e. inflation's liable to be persistent. And once people get the idea into their head that inflation is going to be with us, it's hard to dislodge that idea. And just as it was trying to convince people inflation could pick up. I mean, before COVID, there was a whole cadre of Wall Street people that said, inflation's impossible. They didn't really believe it, even though we'd experienced plenty of it. It wasn't enough to make people change their psychology, and the financial markets had done so well, no one really cared. Now there's a focus on it. Now, remember, we had this enormous price spike. Let's just, for round numbers, say prices doubled. Well, now they're bouncing around a little bit, but they're still way up here, and that is still clear in people's heads. They're still paying that higher price repeatedly, even though it isn't going up at an alarming rate. So you've sensitized people to inflation. The inflation psychology has changed, and I think that's a large part of it. That's kind of part of what's flipped. So it's a myriad of forces, hard to pin down as to why gold has done as well as it has.
Yeah. Where are we at with this inflation debate here, Bill? Because I keep on hearing, lower interest rates, obviously, that's been why the Fed has been a little bit behind the ball here with cutting. Even though there's weakness in the labor market, that was enough for them to get that 25 basis point back in September. But they continue to be very concerned about inflationary pressures.
Well, they say that's what they say. That's what they say.
But what do you see? Do we have inflation, or is it subdued?
No, I mean, here's the problem is we have all the inflation that came before us, and it was a huge amount, and we're still dealing with that. So just because the rate isn't going up at an alarming pace, if it's doubled, if the price of everything, which is not true, I'm just making a simple example, the price of everything's doubled, and then it bounces around plus or minus a couple percent. People say, well, see, there's no more inflation. Well, that's nonsense. It's still here with us, right? And are the policies that they're pursuing liable to make it better or worse? And I think the answer is it's going to make it worse, and there's nothing they're going to do to, it's very fortunate that oil has been as weak as it has, because that's taken that pressure off. Although if you're unfortunate to be in states on the West Coast, you got the people have their hair on fire about the weather, calling it climate change, and forcing you to pay extra gas so they can blow money on pet concepts. But that's a whole nother can of worms.
I keep on asking myself, the general commodity sector has been doing pretty well. But where would it be today if we actually had an oil market that was moving?
Well,
I mean,
I think that would exacerbate inflation, but it wouldn't necessarily make the price of corn go up or other things, right? So
no.
I mean, however, oil feeds itself into lots of things because it's got transportation and packaging. It works its way all through the economy. So it would have a much bigger problem. I don't know. My pet theory is that one of the things Trump did when he went to the Middle East early in the administration was cut a deal with the powers that be and OPEC, like the Saudis, to keep a lid on oil prices while he tried to grow his way out of the deficit, or sorry, the debt that we have. But that's my own pet theory. I don't know if it's true or not.
True. Have you been following the agriculture market at all?
Not really.
It's I tell you what, I think the narrative behind soybeans right now might be one of the most troubling stories in markets that very few people outside of agriculture are paying attention to.
We got,
Which,
obviously, there's a shortage brewing of some sort.
no, there is an oversupply. Prices are
Oh,
in the tank.
oh,
We
okay.
have not sent a single. We have not sent a single shipment of soybeans to China all year.
Oh,
So they have been going out and actually having their supply fed by Argentina, and we are just now bailing out Argentina with the IMF. Which,
oh, yeah. Well,
not
I
to
mean,
get down a rabbit hole, but
I
that's
seen
something.
I seen that beans are $10. It used to be a big deal when beans were in the teens, right? I haven't looked at a
Yeah,
soybean
yeah,
in forever, right? But so, yeah, yeah. Well, I mean,
yeah.
so that's
It's an interesting story. Like, why are we doing this just to turn around and bail out another country who's obviously supplying
well,
commodities
they
to
got a
China?
bigger agenda. I mean, I would assume Trump wants to bail out Melee because he likes Melee's policies and what he says, and therefore, But anyway, that's way over my pay grade.
Yeah, yeah, for sure. Let me ask you. So we have this correction going on here. I mean,
I
obviously,
mean,
we
you mean the one that's maybe 4 hours old?
4 hours old, but it's pretty hefty one here, Bill.
It's
I
all
mean, of course,
it's a
the
percent.
miners,
It's a 2%er for gold.
but the miners are obviously just getting
Well,
sold off hard, which they always do.
but that's because there's no North Americans. Sorry, there's a very small contingent of North Americans who are interested in the idea of precious metals and miners, as I noted already. So, what happened? What often happens when we have these metals corrections, which happen? I mean, all prices correct except for the SPUs because they're dominated by the passive bid. But anyway, um, the what happens oftentimes is gold goes on a run and then the miners stop following. And then gold pulls back and the miners kind of go with it, but don't really. And then the whole complex rolls over. That's happened many times. That's kind of what we just saw. This kind of behavior has preceded almost all of the corrections we've had. And, so they don't go up. They stop going up. Then the hot money's in there, just flushes it because they don't believe in the first place. And there's no real buyers. I mean, like a lot of these stocks are down 5%, and they've had big runs, but they're not like stupidly priced. In terms of PEs. If you assume a PE is a good guide, and for some mining companies it is, and for others it isn't. But so yeah, they're getting hammered, but this is the movie. We've seen this movie, 20 times in the last 7 or 8 years, right? So this
Yeah,
is the nature of what happens when it happens, and
yeah.
then spooks the
And
hell out of
interesting.
everybody.
Yeah, interestingly enough, this is also happening as kind of production numbers are starting to come to the market. The quarterly financials will be coming in, later next month. So we'll
Right.
start seeing really the economics of what Q3
Yeah.
had.
Well, I mean, everyone. I mean, everybody made a lot of money. The question has, each company has a different production profile, cost structure, et cetera, et cetera. So I would imagine most of them will have really good quarters. It's silly to the amount of scrutiny that gets placed on a quarter to quarter basis in the mining industry. It's just absurd, especially when you think about what mining is like, right? I mean, to give so much attention to one quarter versus another is completely ridiculous. You might look at 2 or 3 quarters in conjunction. They can miss the quote unquote number because the stuff went to concentrate and didn't get sold, and so that now it's an inventory. And
Right.
anyone that ounce of brains could do the calculation, but the headlines read one way and the stocks trade. So there has been no real enthusiasm on the part of Americans in the mining sector still, and I don't really think in the precious metals themselves. We still haven't had that party, assuming it's going to happen before this is all over, which I think it will.
Let me ask you this. This is an ongoing conversation I have. It's more philosophical, but it does pertain to the miners, because we have seen the government, on behalf of the Department of Defense or Department of War, whatever you want to call it now, come in and take equity positions. Obviously, there's approval processes, a bureaucracy, and permit approvals that need to happen. That's going to happen within government no matter what. But the purchasing of equity on behalf of the American people of certain specific companies, MP Materials, Lithium Americas, and most recently this week, Trilogy Metals. As a diehard capitalist, I'm thinking this is not what the government should be doing. That's on one side. But on the other side, I'm like, listen, we have been neglecting resource development and things needed for the infrastructure of this country for so long, and the markets aren't proving to provide that resource. So maybe the government is the bidder of last resort. Maybe they should be doing this.
Well,
and I get both ways.
I mean, look, it's one thing for Trump to take a stake in Intel. That's retarded, okay? But for them to take a stake in a critical supplier to the military or something we need industrially here for certain technology applications, that's more of a national defense kind of investment. I don't think there's anything wrong with the government saying, hey, you produce something that we really need. We want to have a stake in you, and we'll help you finance you because we want to make sure you succeed. I mean, that's not like what they did at Intel, which I think was ridiculous, right? But when it's a critical metal, as long as they're not trying to tell the company, oh, and you have to give us a sweetheart deal. I mean, because obviously if you get a long-term contract, makes financing of whatever mine you're trying to bring on, you know how mine financing is, it's a pain in the ass, right? So to the extent that, that it helps bring on the production that they need and helps the company get it done, and then it ensures that the supply is there, I think that's fine.
So what's the big difference between Intel and Lithium Americas?
Well, Intel does not making anything that's absolutely critical to national defense. I mean, I'm not saying they don't have certain parts that they make that are crucial for certain applications. Perhaps I don't know the company as well as I used to, but they managed to blow a monopoly and turn their company into an also-ran. So their stake in them delivers nothing like what I just suggested was okay about going to these strategic metal companies and saying, hey, we want to ensure our supply. Why do they need to do that at Intel? They don't.
Well, and it just, but it's still the equity position. It's just,
but I guarantee you, if you had a property that had some pick a rare earth that you had, and you needed to bring it into production and you needed financing, if the government said to you, hey, we'll finance it and we'll give you a long-term contract and we want a piece of the action, you'd say, done.
Of course I would.
And if they did that because they want to ensure the supply, I don't think there's anything wrong with that. If they're trying to pick favorites or bail out their friends, like we saw after the 2008 collapse, where none of the bad guys went to jail, or you're trying to help somebody and you're like, anyway, I think there's a big difference between what they did in that case and what they're doing in the chip sector, and Trump playing favorites there.
Before we let you go, Bill, I do want to ask you, general market sentiment here as we record, almost close of market on Thursday. A little red on the screen in the big boards, SP, NASDAQ, and Dow. I keep on hearing this phrase, they're going to run it hot. And they're just going to keep going and keep pushing. And I think I get what they mean, but for the general voter, tax-paying citizen out there, how dangerous is it when it appears that the powers that be want to run the economy hot?
Well, the dangers are always inflationary. See, I mean, you have to actually study some financial history to see how out of control we are in the last 20, 25 years in this country. Um, I think what happened when Trump and Bassett got in control, they thought, okay, we'll have Doge and we're gonna cut a lot of expenses and we're gonna get lean and mean and that'll help appease the bond market and that'll be slightly contractionary and that'll help keep a lid on inflation, and then we can try to incentivize growth and we'll reduce regulation. They threw in the tariffs to try to get some revenues. The whole thing was to try to allow them to be able to gun the economy so we can pay off the debts. I mean, if you're a real estate operator like Trump was, you need to fill the hotel so that you can get revenues to pay down the debt because you levered up like crazy to buy the hotel in the first place, right?
Mm-hmm.
So now they need the economy to try to stay solid, to generate the revenues, so that it looks like the budget numbers are manageable. And originally I thought they could try some. They thought they could try some austerity, and then they realized they couldn't. They just said, "Okay, the hell with it. Then we're going to move our bond maturities to the short end. Eventually, they'll have yield curve control. We'll cut rates. We're gonna keep all the stimulus, except for some of the obvious pure waste. In other words, the budget deficit is still quite large, 5-6% of GDP, and we're going to cut rates. It used to be there was some understanding that you didn't want to pile stimulus on top of stimulus when you didn't have any real problems staring you in the face, right? We're not in recession. Right. Granted, some sectors of the economy, like the low end, and of course, it's unusual, young people coming out of college that have real degrees are having trouble getting jobs, right? So there's a real problem at the low end of the economy, and people with assets are still going merrily about their way. So you've kind of got a somewhat weakish economy that's kind of just stagflationary. That's my favorite way to describe it, and weaker in spots than others. Now we've got a maybe budding credit crisis in the so-called private credit arena with what's happened in these auto suppliers, and so maybe that'll turn into something, but that'll just precipitate Fed easing. So
right.
Anyway, I'm back to the running it hot. So the misallocation of capital always leads to problems. And there used to be a sound mindset at the Fed and even some at the government level that understood that you didn't want to have too much of a good time. The famous William McChesney Martin comment from the Fed chairman from the 50s and 60s famously said, you need to take the punch bowl right when the party's getting going, right? Because you didn't want to overdo it. Misallocation of capital has been going on in a massive way since the 99 bubble. Greenspan started us down this path, and we've been on it, and it's only gotten worse and worse and worse. So there's no adults anywhere. There's no adults in the Fed. There's no adults at Congress. There's no adults in the administration. Yes, sure. We're attacking things like we had an open border, now we're closing it. We're going after some, but from a monetary and economic standpoint, there are no adults anywhere. And I think Besson is a very smart guy, but I think he concluded if they tried the austerity path, they'd be out the administration would be gone, ineffective in 2 years, and they'd never be able to do the other things they wanted to. So they decided, okay, we're going to run it hot, because they're playing the political game as well as the economic game, and here we are. So running it hot has consequences for misallocation of capital, which leads to bigger hangovers than even inflation does. And that was the lesson from the 20s and other busts. But people don't learn lessons anymore. We have this financial insanity, then we go on to another version of it. One of these days we'll have a massive, really massive crack up. And part of that is not just the Fed, it's also the passive bid, but that's a whole nother topic and doesn't have anything really to do with our metals conversation.
I'm going to save that conversation. I got Mike Green coming up on the podcast here in a couple of weeks. So
well, Mike is the person that opened my eyes to it. And really, made my life much more bearable because I could not understand why the markets didn't function properly. And especially in, 16, 17, 18. And then, I finally bumped into Mike and he told me about the past. But oh my God, everything makes sense now. And it's caused me to change how I invest, completely changed my approach to short selling. And so I'm giving you a plug now for your conversation with Mike to tell anyone who's listening to this, you be sure and don't miss that.
Yeah, I appreciate that. All right. Bill, thanks so much for your time. Always a pleasure to touch base with you. And we'll talk to you again here hopefully next few months.
Okay. Take it easy.
All right, everybody. Happy Tuesday and welcome. $4,000 per ounce of gold, tagging that last night, then again here this morning on that front month contract, December monthly basis. And so we are going to see how the miners and explorers are responding. Listen, it's been an incredible market in 2025, one unlike we've seen in many, many years. And a lot of specific stories that we aren't necessarily able to dive into, with kind of independently. We do get a lot of corporate updates from these players within the exploration and mining sector, but rarely do we get a chance to get a third-party analysis. But that's exactly what we're going to do today with our friend Tom Woolrych over from Deutsche Rohstoff. He is working on the Opportunity Fund there and a good friend of mine, good friend of the people. Tom, good to see you, man. How you been?
Trevor, good to see you again. And thanks for the kind of intro. Excited to talk today. Like you say, there's a lot of content out there that comes directly from the CEO. So I guess people might be interested in my perspective, right?
Well, I think a lot of people are interested in your perspective, Tom. You do a great job of taking specific stories. You take data, plug it into your model, and get a little bit of a third-party independent analysis. Listen, last time I saw you was in Beaver Creek. We got a chance to sit down for a libation or two, and I got to pick your brain here, but that was off record. So we're going to do something on record today. But listen, before we kind of get into specific stories here, things you're interested in, news that's really hit the pipeline, and discoveries and exploration, as you're watching this market kind of unfold, what are some things that you're like really pertinent of like paying very close attention to? Like, where are we as far as sentiment and capital coming into this unique sector?
Look, today's a really good example of the nervousness in the market. So gold didn't really crack 4,000 with any conviction, and the GDX has sold off 1.3%. So what that's kind of saying is that, particularly in gold, copper's a different story. I'm still super constructive on copper, but particularly on gold, there's nervousness. Every time gold's flat or goes down, people are happy to sell their positions down. And these big things can go down 5 or 10% in a day. So I don't know if that's an indication. Certainly there hasn't been a big event. Nothing's really changed in terms of, the US dollar, is still sort of in a downtrend. Rates are coming down. Bonds seem to have bottomed, maybe going up. You still got wars all over the place. You still got, massive spending, government spending too much money. So that's been the gold trade since Christmas essentially, and nothing's really changed there. But everything's getting stretched out. People are looking at taking profits. They're up 60, 100%. On the majors, they might be up 10x in some of their juniors. So it's creating volatility.
Yeah, absolutely. Well, we know the name of the game is you always want to take profits when you can, not when you have to, or at least you don't want to sell when you have to. You sell when you can. That's kind of the name of the game.
I mean,
listen, it's been crazy because. Oh, go ahead.
No, I mean, if you believe Twitter, everyone picks the bottom and the top perfectly, don't they? But I'm sure that's not true, and no one trades these things perfectly. So yeah, don't forget to take profits.
Yeah. All right, so we're going to dig into a few specific stories here. Discoveries are flooding into the market, and therefore capital is coming into the market, and they are rewarding some of these discoveries. We're going to talk about a few of those big discoveries here. But first, before we get into that, Tom, there's a couple stories that you and I have chatted about here on this podcast in recent times. And maybe we start out with that first one. We're going to dive into the lithium market and talk about Q2 Metals, and they are continuing that big expansion drill program at the Cisco property in Quebec, and we touched base with them earlier this summer as that was about ready to kick off as well. Obviously lithium climbing off of its bottom, the lithium equities have rebounded because of that. But let's talk about Q2 and give me a sense of if you like what you're seeing from that drill program.
Yeah, of course. I mean, it's a tier one ore body. That's fundamentally what it comes down to. Um, I went to site after Beaver Creek after I saw you. Had some time in Toronto and then flew up to Montreal, um, the most French place in the world. Had some poutine. I couldn't believe how French they were. But anyway, we all got on the plane up to Matagami and then a chopper to um to the CO2 outcrop. It's simply remarkable. It's going to be one of the biggest. We don't quite know how big it will be. Um, it's on a highway, the Billy Diamond Highway. That was something that the team were really keen for me to experience. Just that once you fly to Matagami, you can basically drive. Um, you can drive to within 10 kilometers. The last bit we did do with a chopper. But that, they could permit a small road, and a bridge to get into the project 100% on road. So it is a very real project. And you pointed out that, lithium has kind of formed a bottom. Ganfeng is a Chinese. I follow the Ganfeng Hong Kong listing, just as a bit of a guide because the futures markets aren't as mature as the gold or oil futures markets. They are the most mature commodities markets. So you can't really gauge a lot from um, lithium futures prices. So I use the Ganfeng um, um, chart, and it bottomed 4 or 5 months ago. So that's looking lithium. If you believe a lot of this sort of the greybeard investors, you want to do the blood on the streets trade. That probably was 4 months ago in lithium. And if you'd been picking up quality lithium names in the meantime, you'd be up quite a lot. And that's all happened, you know, and all anyone ever talks about is gold, right? So yeah, it's super, super
Mm-hmm.
bullish. And then you asked about the drilling. Should we look at a model?
Yeah, feel free to share, and we'll put this up on the YouTube channel as well. So if people want to
So that
revert
comes
back to
through for
that, they
you.
can see it. Yep, absolutely clear.
So what can I tell you guys? I guess that it's just the scale. You need to be aware of the scale. That rule there is 1,100 meters long. Um, it does plunge and sort of 650-meter wide. So the thing does have a bit of a northerly plunge, so it is getting deeper on this side. The CO2 outcrops is roughly here, and then it plunges away at depth. And then the heats, um, it was the last batch of assays were remarkable. Um, there's kind of two holes. There was a scissor hole that they drilled back. They built back across the deposit just to prove the continuity, um, holds up, hole 2536. That one hit that I've now highlighted in green, that was 272 meters at 1.6. So it's high grade as well. And the other hole they released recently, 151 meters at 1.5. So yeah, it's going to be a strategic asset for for North American lithium.
Yeah. Did it get much of a boost, or is there more positive sentiment now with the U.S. government taking a position in Lithium Americas?
No, I don't think that's carried across yet, and I'm not sure why. Maybe because it's in Quebec. Maybe because people are they still have their brains a bit fried from the massive downturn in lithium, right? It just if you have too many scars, it's difficult to get back into these things. And I'm certainly more cautious in this cycle, if you can call it, an upcycle. But that's why I'm more comfortable in investing in quality. So in the previous lithium run, you saw things with 20, 30, 40 million ton potential, getting billion-dollar valuations, right? This thing, their exploration target, I can't remember what it was, a range of numbers from the low end was plus 200 million tons to and the high end was plus 300 million tons. That fits with my model as well. It plots right in the middle of the exploration target that they published. So yeah, this is certainly one of the best, and it's going to be built for sure. Yeah, and it could be strategic.
All right. All right. Well, let's see how things play out there with Q2. That's obviously one I'm paying close attention to as well. I do want to go back down to Idaho. Tom, you and I have chatted quite a few times on following that big porphyry discovery from Hercules. Well, at that time, Hercules Silver, now Hercules Metals at the Hercules project. And it's been an ongoing story here, and I've had multiple conversations. I'm not a shareholder of Hercules, nor am I a shareholder of IDEX. I'm involved and own shares with Scout Discovery, which private company that we've featured on the podcast. But it just seems like since that big discovery, the district has just kind of continued to remain locked up. Like it hasn't really been able to replicate, anyone in the area been able to replicate that big discovery. Hercules had really nice drill results earlier I think it was in the spring earlier this year that was
probably summer,
better.
But
it seemed like they were on this summer.
Yeah.
It seemed like a positive trajectory. But IDEX came out and kind of showed some smoke, nothing that was really, great here. This about a month ago, got hammered down. But this morning IDEX is back with probably really good drill results. Closer to surface, 101 meters of just over 1% copper. That was within 421 meters of 0.37% copper, starting from surface. So it seems like if you're just looking at it on its cover, this maybe opens up the district a little bit more. So just wanted to pick your brain here about what we've seen in the last 6 months out of this area of Idaho.
Yeah, I'm still bullish. These large porphyry discoveries, they take time, they take capital, they take a lot of money. Unfortunately, it's not like a narrow high grade vein gold in West Africa, right, where you can sort of go from discovery to production in 4 months, even 4 years. But no, I still think the unlocking of big copper deposits in Idaho is still playing out. Who the winner will be remains to be seen. I guess you can just based on the amount of ground that Hercules now have, you could place your bets with them. And they keep on generating new targets as well as I guess the main zone's called Leviathan. I agree with your comment that the sort of discovery hole, I think it was hole 5, it hasn't been replicated. Um, the second hole of this year's program was very good. I think the holes that they're drilling from that same pad will help us understand more about what's happening with what they call the hanging wall mineralization. That's a more shallow, high grade enriched zone. Hopefully, with 0.61, even better than 1% copper grades. And then Chris, to his credit, he just keeps on generating targets. So the Southern Flats and the Donut target are now going to be, obviously going to be a big focus of the winter drilling campaign, before they get access to the State Forest Service ground in the north. I think that's due for April or something next year, so they can get back to drilling the northern end of Leviathan then. So lots of news flow coming. That if you talk about quality geologists, Curtis from Scout, I also met him for the first time at Beaver Creek, and Chris are some of the best out there doing it. I'd add Dustin to that group as well. So you got to back teams doing real drill campaigns, trying to make big discoveries, swinging big, and hopefully hitting home runs. But yeah, we'll see.
All right. Well, obviously, a very massive district we need to be paying very close attention to as far as drilling and trying to show scale there amongst all the players. Speaking of porphyry exploration, I want to head down to one of my favorite areas of the world, Colombia, and talk about Andina. This is the artist formerly known as Rugby Mining. People remember there was a little bit of a rug pull with the former rugby company not able to drill after announcing a financing. That financing did not go through. They were eventually merged and acquired by Pampa Metals. That deal is now called, I think, Andina Resources, I believe, which through all those transactions I currently currently own shares of. But it sounds like they're coming back and planning on doing some more work at that big porphyry prospect in Colombia, Cabrasco, I believe it's what it's called.
Cabrasco, yeah, super exciting. I mean, it's a multifaceted story. You did a good job, kind of hitting the main points. It's been known about for quite a few years now. Two and a half holes drilled into it. All of them, could be classified as what you might call ore in a porphyry environment. Not the highest grades, 0.5, 0.6, 0.7%, but when your target is many billions of tons, that's fine. So that's the opportunity. The stock has been ripping. It's probably over 100 million market cap now. And the reason for that is, Joe van der Nelson, the CEO of Pampa, now Andina, he's taken control of the project, added it to his quality. It really is a quality portfolio with Pekinese and Pampa Medina in Chile as well. So Joe's taken it by the horns, and he's driven it along. He's raised capital. He's got enough money now to drill a couple of holes in Cabrasco, and people are, rightfully hoping, betting, speculating that those holes are going to create good headlines. So, I guess some of the other more subtle things, the quality of the management. Tony Manini, another Australian, he's I don't know, he's like our Ross Beatty or something like that, right? So some of your listeners might not know him, but he's joined on as chairman, and I spoke to him at Beaver Creek as well. He's great. So he's a very successful, extremely accomplished man, walking around Beaver Creek with a dog-eared and battered printed Andina copper deck showing all his mates. You can imagine Tony Manini's Rolodex is probably pretty deep. So yeah, there's going to be lots and lots of eyes on the story as well.
Yeah. I have to correct myself. Andina Copper is the name
Andina
of
copper.
it. They're trading on the CSE with the symbol ADNC. And actually, this week they just put out news that exploration work at Cabrasco has commenced, and they actually published some old core photos from some of those first few holes in
Beautiful,
hole 1
beautiful
and
core.
3. So pretty interesting stuff. Do you have a model or anything that you've worked on?
Yeah,
For
if I'm not
Carrasco at all,
showing you that,
Tom?
but yeah, let me pull it up. So this shows it. This shows it well actually. Where Jordan was, where they announced where he's been sampling today, was here in Cabrasco East. There's some soil anomalism in that part of the license. What I'm showing here is topography. I'm showing topography, and on the map is some geochemistry. This is what element is it? I think it's copper. So you can see that the soil map has created the geologists, they grid these up, and it's created a hot spot right around where they drilled. So they drilled 3 holes. First one back here towards the southwest. Second hole vectoring in on that same high grade zone, drilling almost directly west. And then the exciting hole, drilling up here towards the north. So what the plan is, and obviously exploration plans change constantly, but what the current plan is to set the rig back up here and just finish that 3rd hole. So I guess this is why people are excited that they're finally going to have a stab at it. But this last intercept was 100 meters at 0.7 with a little molly credit as well, 210 molly as well. So that's it sounds simple, but that's really the best stories are simple, right? You can explain them simply. Now, as you know, I like to I like to create volumes of these sorts of things, just to kind of be able to convince myself that there's some scale. So the lighter pink, we could do the maths together. The lighter pink volume is 65 million cubic meters, and the higher grades are 15. So you've got 80 million cubic meters, and then he times that by the specific gravity of rock, which is 2.6. So there's already a 208 million ton volume of known, mineralization, completely open in all directions. So that kind of demonstrates just how bullish it is. This trend, this soil trend is 2.2 kilometers long. So yeah, let's see. A lot of work to be done. A lot of capital will need to be raised. This is heli drilling in a forested area of Colombia. So they'll need to be very efficient with their money. They'll need to raise more money, and then we'll see. Could be massive. This southern border here, this is worth pointing out. The Cometer deposit managed by Rio Tinto is being drilled out here in this gap. No one really knows how big that is because it's Rio, and it's technically still private. Rio is part of a joint venture and a private company, and they've drilled 30 odd holes down there. Rio Tinto have taken over management of that project. So that's pretty bullish as well, right?
Yeah. Very cool. All right, last story. Maybe it's a group of stories here that I wanted to pick your brain here, Tom. The exploration and discoveries up in the Tutagon region of British Columbia has just been amazing exploration success up there. Multiple companies. Amark Resources last winter came out with a whopping haul, really put the jurisdiction back on the map. And TDG Gold, obviously, following up as they share adjacent claims to Amark as well. But you seem very bullish, TDG. You like what you see?
Yeah, I really am. Amark, the Aurora deposit, the Aurora discovery. We don't know if it's a deposit. I guess it's something. This must be west of that hole. So they own everything east of that plan that I've just mapped, right? So this side's Amark, and then west is TDG. Now the problem I have with Amark is that it's 70% owned by Freeport. Yeah. So what's going to happen with that? You don't know. And then the smart money, as soon as this discovery was announced, they could see the holes pointing towards the boundary, and they started buying TDG. And then TDG put out this hole here. I can even give you some numbers. There's a gold hit in there. 100 meters at 2.2 grams. 220 gram meter intercept. Pretty remarkable. Higher grade than what they've been getting over on the Amark side. That's a good hit there. That's 50 meters at 4.5. But yeah, this is certainly looking interesting. What really got me bullish? It's a shame I don't have the map, but the drill pattern after drilling this hole, I guess they had visuals and they put a drilling update, and they put a plan map of their 2025 drill program, and they stepped out massively off this first hole, TDG 2501. Added rigs. All the geologists are super excited. Probably the most bullish meeting I had at Beaver Creek was with these guys and their partners in Skeena. So, yeah, that's the TDG story. Again, quite simple. You just know that there's going to be good results coming out based on what they've guided and the drill plan that they announced.
All right. Tom, let's leave it at that because we've taken up quite a bit of your time and we've covered a lot of different stories here that we needed to follow up on. I want to kind of maybe leave it at this. We obviously have a great market. Capital is flowing. And how do you kind of move about here? Obviously, you've got an incredible wicked brain to really see these things three-dimensionally and let the data provide your thesis. But when things get frothy, when things get very bullish and seems like everybody's winning, how do you keep your cool in these kinds of markets?
Yeah, it's difficult. So my style of investing is, as you've said, let it be data driven. Sometimes you don't have the luxury of perfect data. And you see a drill hit, that the thing's going to open up 50%. So what do? Do you just buy, or do you wait for a pullback, or do you wait for next season, or it's super difficult at the moment. Thankfully, stuff that I've already been invested in has been running as well. But, I haven't made money on PPP and SIG and these things that have, recently had some really good success, at least on the charts. It remains to be seen if they're discoveries.
All right. Tom, Good to see you once again. Appreciate everything you do for the people out there and dabbling in these markets. I look forward. I think I'll see you in May at Deutsche Goldmesse, I'm hoping. Is that true?
Are you going? No, there's one in October, and aren't you going to the Swiss mining one? Yeah,
I will not be at SMI.
Yeah.
Unfortunately.
SMI.
November at Deutsche Goldmesse.
November Deutsche. Yeah, good. Look, I'm pleased we don't have to wait to see each other till May.
All right, my friend. Good to see you. Thanks so much for your time.
Cheers, Trev. Bye.